Good morning, traders. It's the 18th of April. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. How you doing, Steve?
Very good, mate. Very good.
Good.
Got a big smile on my face because we smashed 6, or was it 7? Can't even remember now. Past Leeds last night.
Oh, did you? I haven't even seen that.
Yeah.
Poor Leeds.
I know. Poor Leeds, actually. Oh,
Never mind.
never mind.
Is there a round of Premier League games then? Going on?
No. It's just that that's Liverpool's weekend game.
Oh, right. Of course. Yeah. Wow. Okay. Sorry to any Leeds fans watching. You didn't need that to start the show. But anyway, let's crack on. So, latest headlines. Let's get to those first of all. As always, anybody watching, if you would like a view or an opinion on any market, please feel free to post it up, and we'll do our best to take a look at it from a technical perspective. First up, the headlines though: strong recovery in the New York manufacturing numbers yesterday. The New York Empire Manufacturing Index recovered very strongly to 10.8 for April from 24.6 minus 24.6 the previous month. The release was well above the consensus forecast of minus 18 and the first positive reading for 5 months. So it's pretty good. Companies are only slightly more optimistic over the outlook, while inflation pressures are expected to increase slightly. We saw US yields increase yesterday. US yields moved higher after the latest US data, with the 2-year yield hitting 4.2% for the first time in over 3 weeks. And also we've seen fairly substantial advances in the US dollar. Markets were even more convinced that the Federal Reserve would increase interest rates at the May policy meeting, and the dollar posted net gains and yields moved higher. The Chinese data that we had out yesterday also beat expectations. The GDP number increased 4.5% for the year to the first quarter after a 2.9% increase previously and above the consensus forecast of 4%. The data overall helped underpin confidence in the outlook. This morning we've had some wages data from the UK, and that shows growth that was stronger than expected. The UK labour market recorded a slight increase in unemployment, but there was a strong increase, stronger than expected increase in employment. We've got Canadian inflation data due today. That is expected to decline to 4.3% from 5.2%, with the core rate edging lower to 4.4% from 4.7%. And we've got inflation data from the UK tomorrow, which will be out just before we come live on the stream. And the consensus forecast there is for a decline in the headline rate to 9.8% from 10.4% previously, with the core rate forecast to decline to 6% from 6.2%. So that's it for the headlines. Steve, let's get into some charts. Do you want to kick off with a look at cryptocurrencies?
Yeah, sure. Bitcoin has had a decent run recently, and we did see a little bit of a turnaround at the start of the week yesterday. A little bit of a break lower, tested. Got down to 29,000. Oh, well, this morning's got a little bit lower, but it's reacted higher, 29,122, and we've reacted a little bit higher from there. We are in this band of resistance that we have between 28,500 and 32,500, and it seems to have stalled just over halfway through it. If we look at the 4-hour chart, looks like we could have completed a 5th wave impulsive move higher. We're now in the midst of a correction and a nice little A leg to start with. Although on the 4-hour chart, if we really drill down into it, it's quite a nice reaction from the bottom of this Ichimoku cloud here. And then the kick, we've kicked on since 5 o'clock this morning UK time, and forming a nice little reversal. So this could be the B leg of the ABC correction, potentially targeting a move between 29,870 and 30,300. That would be very technically nice. We'll call it nice. We'll just call it nice. Ethereum has stalled at 2140, and reacted lower in the same way that we saw the sell-off in Bitcoin. A little bit of that safe haven fallout lower after the dollar has picked up a bit, and it's had a nice little reaction this morning as well. Again, looks like an impulsive move higher has stalled, and we're looking for that A leg to complete. An A leg would target a move down to 2022, unless it was exaggerated slightly down to 1948. Remember, one of the key levels we're looking at in Ethereum is all the way down at 1730. We projected nicely higher, but we've got this nice band of upward trending support in the form of the Ichimoku cloud that comes in at 1978. XRP has just gone sideways and it's mixed up with the cloud, and again we've got a smaller Elliott wave playing out, the orange one here. That's completed a ABC correction, looking for the fifth wave now of the major wave count, and that projects a move up to 6270, but at the moment just hugging the coattails of Bitcoin really at the moment. That's been driven by that. Let's move on to commodities, because we had another downward move in gold yesterday. Let's take a look at the daily chart to start with and see what we did. We had this really big reversal on Friday, broke below the 2000 level, got down to 1992.5, and when we came in yesterday, we were trading around about 2011, quite close to the highs of the day. In fact, it worked out, and then we had an extended move down to 1981 before buyers came back in. So you still got that underlying bullish element that people are looking for to buy dips in gold, and I think that will probably continue. Dollar has found some support and has rallied towards that 102 level in the dollar index. So this has led to a natural sell-off, and then I think dollar index pulled back a little bit, and we've got that little bit of relief rally. So overall, we're looking at dollar being the key driver here. There is the backdrop of inflation that we everyone keeps ignoring and hoping will go away if they shut their eyes for long enough, but it doesn't seem to be doing that. So yeah, levels to watch today in gold. Let's drill right down to the hourly chart, see if we can get anything out of here, hoping for a gun to head trade idea to pop up in front of my eyes, because I seem to struggle with everything else. We have had this, we see this major sell-off. Then we got the bullish engulfing candle on the hourly chart, corrected slightly, then the next drive lower, so like an ABC correction. And again, we found a little bit of support here. We can look to the left and we can see some horizontal support at that 1981 level, and just sort of, but there's no real other obvious signs of, apart from maybe posting, say, a lower high here. This is on the really short-term chart, on the hourly chart. So really looking for maybe other indicators. What can we say? We love the Ichimoku cloud, so he can come in. We're below the Ichimoku cloud, so that's not great. The 4-hour chart, let's get something from there. We're in the middle of the cloud on the 4-hour chart. Again, we've had that 5-wave impulsive move higher. We topped out at 2050, so that's $25 short of the all-time high. And then we've had a really decent pullback on this A-leg correction. Maybe the A-leg is complete. We're looking for this B-leg reaction up to around about 2000, well, anywhere between 2006 and 2022 before the C leg sell off. So we'll maybe leave this alone for the minute. It could be forming a bit of a head and shoulders top, so I'll leave it alone probably today. Crude oil has had a bit of a turnaround as well over the last few days. Remember, we had the breakaway gap, OPEC plus nations saying they're cutting oil production, had the breakaway gap higher over the weekend of the 31st of March and April, and we haven't managed to get down below $79. So for us, that's the main level of support. If we do manage to break below there, there could be quite a fast move to work down towards that 70, just below that 76 area. But the 200-day moving average has done a bit of a job here. It's capped those gains, and we saw a nice little sell-off yesterday. Oil breaking to the downside. 82.58 the high, 80.42 the low. Nice $2 move to the downside. It's just holding here. So that's the daily chart. 4-hour chart. Looks again, we're in the ABC correction after a five-wave impulsive move higher. So maybe a reason to look at this for a gun to head. And yeah, potentially bearish flag pattern forming, maybe after the break through the hourly Ichimoku cloud. Maybe 4-hour cloud is holding up pretty nicely. On the Brent crude side of things, it's trading at premium of $3.70. Again, we've had that gap higher. The low we've got here, or the level to watch, is around 83.40. We can see that we broke down from support yesterday and on the back foot a little bit, although this morning has been positive so far. But again, didn't get as close to that 200-day moving average. We've obviously saw that premium drop out of Brent crude over the last few weeks. Natural gas, I don't really want to talk about this one. This is my gun to head trade yesterday, looking for that break lower. Greedy Steve should really just like stick with it, the big support levels that we got. Maybe a lesson to myself. $2.06 is where the line in the sand is, and we've had that break higher on Monday, and I was looking for it to fill the gap. Silly boy. So it's a bit of a breakaway gap there. And actually, we went to the hour chart, there wasn't a gap, so I should have just ignored it. Yeah, but that looks like it's broken above resistance now at 232, looking quite positive. Could potentially be a double bottom here, double bottom on these two lows here. Leads to a target of 259 on that formation. So, yeah, I'd have been a lot happier if I went with that route, Steve, but never mind, you didn't. So let's go to Joe for the FX, and then I'll dive into some indices.
Okay, thank you, Steve. Right, let's take a look at the dollar index to start with. So as we mentioned in the headlines, there's been a decent-ish move to the upside here. So we know that dollar's been on the back foot for a while now. We can see that the downtrend really has been in place since these highs from September last year. In recent times, prices have been kind of contained within this wedge. We found support at these previous lows that we posted back in early February. We saw a decent reaction from that level. Then we've seen prices revisit, touched that again yesterday, 2 days ago, and posted a bullish outside candle at that point. And then we followed that up with further gains yesterday. Bit on the back foot today, but possibly attempting to break through this wedge pattern that we have. If we can get a clean breakthrough that on a closing basis on the daily chart, then that may indicate they're about to see another bounce, a decent bounce from this area of support on dollar index, which could lead to a decent move to the upside. Still mindful of this level of resistance that we've got here in red. That was previously a gap which acted very nicely as resistance on a couple of occasions. That's at 102.83. So that will be the next level in the short term to look for on the upside. But we're still at the moment contained within this wedge. So watching today to see if we can get a break from that wedge to the upside on a closing basis. And if we can, then that may trigger further gains in the very short term. On the downside, still watching this big level of support at 182. Just through some of the other majors quickly. So we posted this bearish outside candle on Friday on cable, and we followed that up with further losses on Monday, actually gapping lower on the Sunday open. Again, trying to rally a bit today, but this is pretty significant resistance here. What I actually noted on the daily chart with the cable was quite interesting in that we are trading within a fairly large range here, down to sort of 118.41 up to 124.46, and we can see that despite numerous attempts at trying to break through this level, so far we have been unable to do so. We've not seen a closing break on the weekly above that level. Last week we posted a doji having seen new highs on the week, so that is a bit of a concern. So major resistance there at 124.46. Yes, we might try and hover above it a little bit in the intraday price action, but we need to be seeing a close above that on the weekly, I think, before we can get too excited about further upside here. Euro US dollar, we can see here that prices actually did break through a resistance level here, 50% Fibonacci retracement level, decent candle last week. We can see there's been a pullback into that level early in the early part of this week, and prices have held. Intraday, sorry, on the daily, it doesn't look as great. We can see a bit of a swing failure here. So we tried to break above these highs that we posted in early February. We did actually get a close above it, but then we rejected that the following session on Friday and posted 2 negative candles in a row. Ultimately, we are still trading in a bullish channel, as we can see here. So therefore, prices on the pullbacks may be limited. And therefore we can still look to buy dips based on the fact that we've got a pretty decent trend in place. But do be aware of this high at 110.32 acting as a bit of a resistance level in the short term. Let's take a look at Aussie versus US dollar, see what's happening here. Pretty messy price action. We did have a bit of a wedge, which we broke down from, then we got back above it, but we did fail into previous swing high levels at 67.93. So maybe we need to invalidate that as a wedge pattern and get rid of that as a theory. But yeah, it seems to be some resistance here. Pretty choppy stuff. No real clear direction on that at the moment. Let's look at dollar yen, see if that's cleared up at all. Not really. Price is still pretty choppy and indecisive there at the moment. Certainly a bit of dollar strength in recent sessions, but we've got resistance up here at 135.93. Dollar Swiss was looking pretty ugly following a big breakdown through support around 90.59, and prices continue to move lower. Seen a bit of a bounce back in the last couple of sessions, but ultimately the trend looks pretty bearish there. As you can see, this was a big support level, has been in place since November 2021, so a pretty significant breakdown there, and therefore it's a case of selling into rallies towards those newly formed resistance at 90.59 to 90.85. Okay, a couple of requests to get through. Going to be looking at Euro, New Zealand dollar, and Aussie CAD. If you've got any other requests, guys, who are watching, please feel free to post them up quickly while we're on the currencies. So looking at Euro, New Zealand dollar, it's been trading really nicely within a bullish channel now for some time, going back to kind of mid-December last year. And we can see that it's remained nicely in that channel. It broke through these previous highs that we posted back in October and September last year at 175.32. But interestingly, we're into a 50% Fibonacci retracement level at 177.60. So that may, and also it's obviously at the upper end of this bullish channel, cap gains in the very short term and lead to some sort of corrective move. Let's just take a look at the longer term picture here. So going from these highs that we posted back here in March 2020, so that was around the height of the pandemic. We've gone from those highs down to these lows that we posted in April. The 50% fib level is here at 177.60. So that could be quite pivotal and could be a very interesting level to watch. So based on the fact that we've had a very strong move higher, we've got a very significant fib level here. Maybe my bias would be looking for speculative sells in the short term, at least to retest this support at 175.29, which we have done in recent sessions anyway. So maybe pullbacks to that level. Short-term ranges could persist in Euro, New Zealand dollar. Let's take a look at Aussie CAD. That's been trading in a pretty nasty downtrend. We can see here trading in a pretty neat bearish channel. We had a bit of a correction within that channel, which eventually broke down and led to further declines. We took out these previous swing lows here, so we can see there was one from December last year and another one in March. We sliced through that. That now appears to be acting as resistance at 90.42, but we have found some support at 61.8% fib level. So prices, again, maybe quite tight in a range here, up to kind of 90.42 and finding support around 89.61. So my preference, given that we are trading in this bearish channel, would probably be to sell into rallies around 90.42 and eventually targeting a full retracement down to the 78.6% fib level at 88.02. Going to take a look at dollar CAD now. Mark's requested that, Mark Thompson. Let's have a quick look at dollar CAD. So what's going on here? I haven't really got too many annotations going on here at the minute. So let's take a look at this, shall we? So we can see that ultimately prices are moving higher over the long term. We've got a very nice uptrend in place, a sequence of lower highs, lower highs and higher highs here. But we do appear to higher highs is what I meant to say, and higher lows.
High highs and high lows. That's it.
Yeah,
Well
sorry,
done,
I got
Joe.
there in the end. Yeah. bit of a brain fog there. But looking at price action in the more recent term, we can see that there does appear to be a bit of a range in place here. So prices are kind of contained within this for the time being. The lower end of the range coming in around 132.25. We've also got some lows here from February, which may provide some support. So approaching the lower end of that range. So therefore, from a speculative point of view, we can see that the overall trend and the longer term remains positive. So maybe buying pullbacks into this area could provide opportunity. Obviously, we've seen a bit of a turnaround in the dollar over the last couple of sessions. Not really anything stand out in terms of the candle formations in the short term here that indicates we're going to see a big move to the upside. So at the moment, we are in corrective mode. Maybe a move into this kind of area here between 132.25 to 132.62 could provide a decent opportunity to think about some speculative long trades. But for me, it looks like it's trapped in a bit of a range for now. I'll leave it there, Steve. You can take a look at the indices for us.
Okay, mate. No worries. Let's take a look. Right, let's start with Footsie. Footsie continues to rally. We've had 1, 2, 3, 4, 5, 6, 7. This is the 8th day. And normally we do get a little bit of a technical turnaround after the 9th day, which we always talk about, but we won't talk about it just yet, just in case. From a Fibonacci perspective, we've sort of like broken above the main Fibonacci levels. Even the 78.6 hasn't been taken out just. And yesterday's candle was a little bit of a doji candle, a little bit of indecision maybe at the top. We have got this like confluence of price action previously, where we should find some sort of resistance all the way up probably to that all-time high. Just above 8,000. So yeah, no real indicators apart from the fact that the momentum higher seems to be slowing somewhat. On the DAX, we got a doji candle yesterday after making quite a serious high, 15,900, just got above there and slowed down, reversed. Maybe looking for price action. If we do get a break lower today, that'll be a nice evening doji star formation to look out for. But at the moment, still trading quite nicely above the hourly and 4-hourly trend. Looks like the impulsive move could have topped out here, and we're looking for this ABC correction. So but all a bit sort of preemptive, really. Real sort of like short-term support, I would say, would be around about these levels here, all the way down at 15,758. And yeah, this morning having that push higher, but obviously think about what's going on in the bigger picture. The momentum seems to be stalling. We've had a lot of a real decent reaction into the indices over the recent weeks, and yeah, let's see what the US is doing. The Dow, again, we sort of like seem to get this stalling action going on just in front of the major resistance levels. We've got that a band of resistance between 34,250 and 34,500. Hanging man candle on Friday, similar sort of candle yesterday, where price action has broken to the downside during the day, but managed to sort of like claw its way back to close to the open. And we've seen that on a couple of occasions now. But the major resistance, as I say, up above seems to be sort of like sitting there like a bit of a cloud. Have we done enough in this so far? 4-hour chart is always a pretty good indicator for the short-term trend. And as you see, it looks like the 5th wave's completed. We're looking for this ABC correction. Well, looks like we've had the A leg down, looking for the B leg and then the C leg to form. So as long as we don't get a break above those highs, then there's still potential for that. Otherwise, it'll redraw, show this as still as remaining as the 5th leg. NASDAQ, similar sort of price action here. It looks like the 5th wave's complete. It almost is setting me up, Joe, to have a little bit of a dig at the indices. One of them, I'll pick one of them. And as we know, it's Tuesday, so it's turnaround Tuesday. And yeah, levels to watch on the NASDAQ, really the swing high that we've seen yesterday, 13,160, and the support coming in at 12,950, although major support, a bigger support would come in at 12,833. And S&Ps, that shows a 5th leg completion and a really deep A leg, B leg, C leg. So I really don't like these some of these patterns that these computers draw on here. I mean, if you gave me this chart, I don't think I'll ever find this here, and it doesn't make sense to me. So let's ignore it anyway. But we are at, we've got this previous area of price action, which topped out eventually. So really looking for resistance above, probably in the form of like 4,194, which was the high from the 2nd of Feb this year. So that's where we are, looking maybe for these indices to sort of like have a little bit of a retest to the downside, but there's no obvious reversal, so I'm clutching at straws a little bit.
Yeah, okay, cool. Right, let's take a look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream. So if we had a gun to our head, the ideas that we come up with must have stops and targets and risk reward ratios better than 2 to 1. The ideas will close out at 9 p.m. UK time or when the stops or the targets are reached, and we risk 1% of trading capital per trade. So we're running this on a live account. Don't know if you can flash that up for us, Steve, just so we can have a quick look. We're doing it with Awanda. You can see Steve's page got Awanda live. So we started off 2023 with a £2,000 balance. We are up by just over 1R from when we started. So it's been a bit of a grind, but it's been a bit of fun. And we're taking a very consistent approach in what we're doing here, but just trying to, I guess, indicate it is a difficult game, and yeah, we're just trying our best, aren't we, Steve?
Yeah, no excuses. I haven't had a good run. Maybe we're getting too conservative, Joe.
Well, not losing. We're
Yep.
sort of staying in there, maintaining the balance, and at some point I think we'll go on a crazy run and put a big bit of P&L, a bit of profit on that account. But we're monitoring these trades every day. So, Steve, yesterday you picked natural gas, is that right?
Yeah, let me bring it up. Yeah, looked at natural gas. We had a break higher over the weekend, and and it was previous resistance level just above. And I thought, okay, we had a little bit of a turnaround on the hourly chart, and I went for it, but it just blew out completely at 1 o'clock in the afternoon, and moved back higher. So yeah, as I say, there was when I first analysed the charts on the stream, I was talking about that potential for that bottomed holding, and then when I got to the gun to head trade idea, I got all carried away.
Yeah, never mind. Looking back, just updating the results. We had a good day on Thursday where we had Euro, Oz, and Dollar Yen both making decent returns. So we made 3.63R on that day there, which was quite nice.
Yeah, that's pretty
So,
good. I think I enjoyed that on. I shared that on Friday before giving a duff trade.
oh no, okay, right. Let's get back on track today. Let's fix this. I've got one ready if you want to
Yeah, go ahead.
help me out and get it on. I'm actually going to take a look at silver. So we've seen a bit of dollar strength in recent sessions, and that seems to be pulling back the silver price. So looking at the daily, we've got a level here from March 2022 down to these lows in September 2022. We've got an 88.6% fib level here, which appears to have capped the gains in the short term. Now, it's not the most frequently used Fibonacci level, but for me, if we're into that kind of level, it's kind of large chance saloon for these fib levels to work. So from a risk reward perspective, it works out quite nicely. Also, we can see that we've seen a very sharp move to the upside on the daily chart in recent weeks. And then we posted this bearish outside day candle on Friday, followed that up with further losses yesterday. So we're attempting to bounce back a bit today, up by 0.5%. But I think potentially this could trigger a bit of a corrective move to the downside. So if you squint on the hourly chart, maybe what we can see here is some sort of short-term top, making this the left shoulder, this ahead, and this the right shoulder. And if that is to be the case, it suggests that we're actually rallying into the neckline of that head and shoulders top right now. So I quite like that from a speculative point of view. So I'd like to sell silver at current levels, and I'm going to put a stop loss just there at 25.41. The measured move of this head and shoulders top, and the way we do that is we take a measurement from the head to the neckline and project that lower comes in at 24.22. So on that basis, I think my risk reward ratio is about 3.5 to 1 today on silver.
Yep, that's on, mate.
And obviously going to require a continued strength from the US dollar. So as you can see, Steve's placed that order there live onto our account, and now over to Steve to hopefully pick us a winner as well.
Yeah, I'm looking at dollar index, WTI, West Texas crude oil, and looking maybe at a potential for this bearish flag, maybe. Just in the last hour, we've engulfed the previous hour's price action, so maybe not a bad time to do it. So looking to set shorts here. Oh, that's quite a tight stop, isn't it? Oh dear. What about that one, Stevie boy? What does that look like? Yeah, I don't mind this one. I'm going to be a bit aggressive with the risk reward on this because I know what oil does. When it does have a break, it has a proper break. It can have a nice reversal. We've had a decent upside since the boys at OPEC Plus. Can I get this trade on though, Joe? Price stop. I want to put the stop at. There we go. 81.48.33. 30. Yeah, risking that, and I'm going to target a move to 79 for 830. How about that? It's a 4-to-1 risk reward. That looks good to me. 1%, risking 20. Let's get it on. Okay. Let's get it on.
Beautiful. Right. So we've got 2 trades on there. We also get them published up to our TradingView profile. So if anybody wants to follow the progress of those throughout the day, please feel free to do so at signal_center. In terms of data due out today, over the next 24 hours, we've got German ZEW data due out at 10 o'clock, so that's likely to impact certainly the DAX, but also the euro currency. At 1:30 UK time, we've got the Canadian consumer prices. Canadian currency is obviously going to be impacted by that and likely to be quite volatile. Then tomorrow morning, we've got UK consumer prices, the latest read on inflation in the UK. That will be out prior to us coming on the stream at 7 a.m. So rest of the week, we've got some global PMIs to look forward to. And that is pretty much that, Steve.
Lovely. Good luck with trading today, everyone, and we'll see you tomorrow.
Indeed. Have a good one. Goodbye.